What is going on, people? It's Matt from Liquid Loans, and in this video we're going to find out how Liquid Loans is a community bank. Let's go. So let's get down to business. How often do you visit your local bank branch these days? Probably not very often. And when you do go there, what are you going there for? The reality is we hardly ever need to go to the bank anymore because we can take care of almost all of our finances online. We can pay our bills, send money to friends, take out loans, transfer between accounts, the list goes on, yada, yada, yada. And we can do this whenever we want without having to worry about the bank's restrictive opening hours. So the rise of online banking over the last 20 years has meant that most banks have closed a large percentage of their branches, never to be opened again. Which really begs the question, with their overheads massively reduced, why do interest rates on savings accounts seem to be getting lower and lower, and why do borrowing fees seem to be getting higher and higher? As DeFi rises in popularity and people become more aware of new innovations that allow them to become their own bank, traditional banks will need to get with the times or risk being left behind. Liquid Loans is one such innovation. So if you've ever sold an asset, maybe it was a crypto, a stock, or even a piece of real estate, and then watched it go up in value soon after, you'll know the feeling of wishing you'd held onto it for longer. We often call this seller's remorse, and one of the main reasons to use Liquid Loans is to extract value from your Pulse while avoiding potential seller's remorse. And if Pulse performs anything like Ethereum has over the last 6 years, then the seller's remorse could be huge, which is why we are #neverselling. But there's more to Liquid Loans than extracting value from your Pulse without selling. So let's take a look at some of the benefits of the Liquid Loans ecosystem. First, you have interest-free borrowing, which is unheard of in legacy finance. Liquid Loans is able to do this because once deployed, it's simply a finished piece of code that lives on the blockchain, meaning there are no big ongoing overheads. You simply choose your own collateralization level and automatically mint your own stablecoin. Liquid Loans was built by the community for the community, and it works because the community provides the protocol with stability. No rent, no bills, no security guards, just community members supporting each other while protected by the blockchain. Now, flexibility is a core component of DeFi, and Liquid Loans is no different, and nobody sums this up better than an 80s Van Damme doing the splits. And since the stability of the Liquid Loans protocol comes from other community members, there is no need for you to ever pay back your loan if you don't want to. You can also adjust your collateral ratio depending on what's going on in your life at any time. For example, you could use a high collateral ratio, say 1000%, if you were off traveling for a month and you didn't want to be glued to your devices and worried about a downturn making your vault risky, as at this ratio, you could withstand a drop of around 90%. Or you could even make your collateral ratio risky on purpose, as you may feel the market is about to turn and you want to use a possible impending liquidation as a stop loss. It really is up to you how you want to use the system. So when we look at CeFi, there's just so many fail points compared to proper DeFi protocols, it becomes somewhat comical. Now these days, real world bank robberies don't happen very often. Instead, users are robbed by credit card fraud, identity theft, and unfortunately, this happens fairly frequently. When you use Liquid Loans, you're using a fully finished, audited piece of code that lives on and is protected by the blockchain. Once deployed, the protocol has no admin keys, so even if anyone wanted to change the code, that would not be possible. Put simply, the protocol is protected by immutable code. Now, this community bank also offers a number of ways to invest and earn more. Generating passive income inside the protocol is nothing like the not so high interest savings accounts offered by CeFi banks, and there are two ways to earn. First, you can provide stability in the stability pool and receive rewards in the form of Pulse from liquidations, and then you're also rewarded with a loan token. You can then take that loan token, stake it in the staking pool, and receive rewards in the form of the USDL stablecoin and Pulse from the fees. So to sum it up, Liquid Loans is a community bank built for the people, by the people. It has 0% interest borrowing, no repayment schedule, and has multiple ways to earn passive income. And most of all, at the core, is true DeFi at its best. I hope that video showed you the power of a DeFi community bank and how it really is a win-win for everyone. If you liked the video, guys, do hit that subscribe button and that bell icon so you're notified every time we drop new content on the channel. You can also share the video with someone who you think it might benefit, tap the like, drop a comment for the algo, it does help the channel out. Thanks for watching, and I'll see you on the next one. Peace.